Madam, first thing, thank you so much for straight away agreeing to spare your time, have an interactive session with our members. Very wonderful of you. Thank you so much. Madam, let me introduce Arun Ramchandran to you. He's the co-chair for the indirect taxes. He's also on the call. That is Arun. Madam, thank you so much once again. So just to give you a heads up, madam, and get people on board. Madam, we are running a series of discussions and interactive sessions, six sessions. Today is the third one. The first and second we had with one Mr. Abhay Desai and one with senior advocate Mr. V. Raguraman. It was on what do we do when there is a communication or a notice from a department, and what are the rights and privileges, do's and the duties and obligations of the tax officer, etc. in this entire assessment proceedings. So as BCIC, madam, for our members, we had run such a series about maybe a year back, say November 2020 around. And members again asked us saying, let's do one more because nowadays they are facing the audits. So it'll be very good to have a session so that all of us are on the same page and we know what to do, what not to do, what to expect, etc. So in that connection is when we as chamber met you. Thank you once again for right away accepting to have an interactive session with our members today. So I'll put it this way, madam. We'll hear it out from you and maybe leave the floor open after that for our members to post questions, what they have to hear it from you, madam. I over to you, madam. Thank you so much once again.
So a very good afternoon to all the members who are present today. And I think it is a very healthy trend to have this kind of discussions in a periodic way, because though GST is quite old now, it's 4-5 years old, but audit processes are quite new. And we are aware that now that audit and scrutiny process have started, some of you are facing kind of apprehensions, which we will try to address today. What I would like to say as my opening remarks is there is absolutely no need to panic. We have extensively trained our officers in the procedure, but still, as in all the cases, beginning phases may have some kind of issues. We are here to sort them, to hear you out, and to explain things to you, and maybe modify at our end wherever required. Having said that, I am also assisted by my additional commissioner, Dr. Ravi Prasad, is also here. And I hope all of you are keeping safe now that we are seeing a third wave. We were quite hopeful in Q3, the economic activities had really picked up and our collections had also improved. But thankfully this time there is not much restriction except for the weekend restrictions which are posed. And there is no indication from government of further restrictions. So I hope that things would not be as bad as in previous wave, and really hope that the things will tidy up quickly. After 43rd council meeting, there were a slew of amnesty schemes which were announced. So I'm sure such issues, if happen, could be tackled in days to come. With that, I would open the field platform for having to hear from you, and maybe after 2-3 speakers speak, we will try to address the issues jointly. Thank you.
Sure, madam. So let me just set the floor. Madam, there have been what we did was we reached out to our members also in terms of what their concerns are. How do we kind of have an interactive session with you today? So there are some questions which have come up in terms of we've discussed this in the past. Maybe it has come up once again. So I'll maybe start with that, madam. One of that is basically from when there is a yes, of course, we have a manual in terms of how the audit or any of the proceedings have to be conducted, but we apparently have one from the state and one from the center. So the ask from the industry has been that if it would augur very well if we are able to combine the two and release one, so that there is full-fledged uniformity in that.
I believe Karnataka state was the first one to come out with the audit manual, and that was also to an extent adopted. I was under the impression that same almost on similar lines center has at least Karnataka center team had published theirs. We will have it looked into. If there are any kind of mismatches between the two, we will try to address. But if your team has worked out on such kind of discrepancies which are there or differences which are there, you can point it out to us.
Sure, madam. I'm making a note of it. I'll meet you for this.
And in our audit cases, we send out something some similar to DIN number. We send out a K-gain number, which stands for Karnataka GST Assessment Inspection Number, which is similar to their DIN number. Other than that, I don't find much mismatches, but if there are any, we would be happy to sort it out.
Sure, sure. In fact, that was the other thing which members were kind of asking, saying we had heard about this K gain, but we don't see it in all the documents. So, any assurance from your side, madam, on that?
You would be seeing it in audit documents, not the inspection documents. We have already implemented in E-Shodhne module, that is our audit manual. There we have implemented it, but not in the other LGSTO or enforcement modules. We are yet in the process of that, but I am sure if you check your audit manuals, you will be seeing the K gain number there. Dr. Ravi Prasad can help me there if there is something missing.
As far as madam, as far as K gain is concerned, we have implemented in the audit module, and we are yet to implement in the other modules, madam. It requires a lot of back end work, which is in a due process. Therefore, on the moment we implement it, I think we will be similar to the central government in as far as the DIN is concerned. But
Okay.
we are issuing the notices as far as today is concerned. We are issuing the notices through the official email ID, and it is to the email ID of the dealer who has been, which is registered in our system. And the officers, I mean, the dealers can always get it confirmed over telephone with the officers whether this is a genuine notice or not, in case if they have got any doubt.
Sure.
Therefore, also we are going to put up all the list of the officers and the entire setup of the department, who is the officer and what is his telephone number, and everything is on our website. Therefore, I don't think that it is difficult for you to get it confirmed in case if you have got any doubt about any notice.
Sure, sir. Thank you so much. It was very reassuring.
Let me just pitch in. In audit cases, the verification of genuinity of notice is still more easier, because if you see the E-Shodhne module, if the user goes to his web page and enters the K gain number, the notice number which he has received, and he will get an OTP to his mobile number. If he feeds it, he will get the details. So it's very easy to verify using a K gain number regarding the genuinity of the notice.
Sure.
In audit cases.
That was very reassuring. Thank you so much. I hope our members who asked that question have got that message loud and clear. Then there's one more ask from the industry side. It is more like with everything being all the everything being soft copies when it comes to maintenance of records. There has always been a question. The eyebrows get raised during the audit proceedings on assessment or any of these proceedings for that matter. When we say all the originals records are at the head office, they are kept in such a place, etc. But nonetheless, in all these cases, copies or electronic versions of that are available, but still there is an insistence on the original documents at times. So is there something we can do about it, madam?
I think only as long as if it's a branch office and you are producing electronic documents, that should be fine. Dr. Ravi Prasad, can you please comment on this?
Yes, madam. Yes, madam. Madam, the law says very clearly that the documents should be maintained and produced at the principal place of business in the state, and in the case of branches which are there in the same entity, registered entity, they have to have the branch-wise records like inventory and other records. Therefore, madam, they have to produce the books of accounts. I mean, in case if it is electronic, they have to give access to the person who has come for inspection or audit or something like that. They have to allow the access. Otherwise, it will be very difficult in the sense that if they are maintaining at the head office, if they don't give access here and they say that everything is maintained there, I think it will not be in accordance with the provisions of the Act.
Well noted.
At least they should give us the access. They should give us the access to the information on what all the records they have to maintain, and they have to give at the time of audit. They have to give the trading account of this business entity, because a lot of issues are there because of the cross charge issue. There is a stock transfers issue. Therefore, the officers who have come at the time of inspection need to verify. Without that, they can't complete their audit work. Therefore, I think I request all the members to cooperate with us, and they have to produce that.
Sir, thank you so much. Very well noted, sir. it is my, I'm sure, of course, I fully echo your comment to the extent that, each one of us have to produce the documents. Otherwise, there is nothing that can really get verified. But I think if I may just rephrase the question, maybe it is in the context of providing soft copies versus hard copies. There is an insistence that everything should be available in the hard form. In some cases is what I was given to understand.
It's access to the soft copies is also okay. You don't access to soft copy at least can be given, and the basic documents which is in support of the transaction like vouchers and the invoices and the stock transfer memos and the e-way bill, whatever you received from you, the purchase invoices, the expense vouchers which you have maintained. At least that cannot be just a soft copy. It has to be in the hard copy if it is related to the branch.
Sure, sir. Noted. I suppose all of us are making notes of all this so that we know what to do when there is a question that comes up. So the next one also is in the same context. As you said, the trading account has to be furnished. But a lot of times, given that multiple states people are operating from, the books of accounts or maybe equivalent of a balance sheet or a P&L account may not be available for the operations at the state level. Sir, how would you suggest we go about that? See, because the trial balance may not be available for state level operations. It will be at the pan India level that will be available. So would it suffice if the taxpayers are able to produce inward supply details and outward supply details to the extent it relates to the operation?
No, I don't think so, because the GST is a state tax basically, because both the state and the center operates within the state. Because it's no longer a national tax like central excise what it was. Therefore, it is a GST is a subnational jurisdictions are there. Within the state, if you see the CGST, the framework of CGST, the framework of SGST, each person who is operating within the state has to take registration within that state. And both on the same transaction, both CGST and SGST will apply. Therefore, it is basically the jurisdiction is a subnational one. Therefore, the entire thing accounts has to be at the level of the registered entity. Therefore, I think it should be basically it should be the state level balance sheets merged at the national level to for the purposes of the other taxes like income tax and other things. It should be like that. It is not the other way around, top down. It's not top down approach. It has to be the bottom up approach. Therefore, I request that you may have to, change the way the accounts are going to be merged. Therefore, it is very important because of the fact that interstate transactions, stock transfers, cross charges, there will be a lot of transactions between the same entity within the state as well as outside the state. Therefore, we are given a privilege that even within the state, they can take multiple registrations. Therefore, all the merger should be from the bottom-up approach only rather than top-down approach. And hence, you have to have the accounts at the branch level or at the entity in the state level.
Sure, noted, sir. Maybe with this, I'll request other members to start, asking their questions. Maybe I'll chip in a little while later. So maybe we have Mr. Prakash Rao, Deepak, Mr. Manor is also here today, Madhur, so many others. So Arun, you may want to add to this. I'll just pause for a minute here.
I think we should open it to other members. If there are questions, do you want to, if we can unmute and then raise questions?
Yeah, I'll unmute myself. I'll mute myself for a minute. So let's wait for other members to come in. Either raise your hands or post your questions in the chat box or unmute yourself and speak. I see Prakash Rao sir's name. Sir, please. We have Annapurna also today. Annapurna, please, we'd like to hear from you too.
Yeah. Good evening, sir. Good evening, madam. Hello.
Annapurna, you're audible.
Yeah. Basically, actually, the major part is the liability payment with major taxpayers, like whether they have to pay through GST 9 or whether they have to pay through GSTR 3B. I think this is the most common issue which we all are facing today. So if they derive any liability, whether they have to pay through GSTR 9, they have to wait for GSTR 9 and then they arrive the liability and pay it, or directly they can pay to the GSTR 3B of the current month. So that is the issue they are asking for the respective financial year. Ravi Prasad sir, are you able to understand? For example, like reverse
I
charge
heard.
tax liability.
See, you should understand, madam. Basically, if you see the structure of the GST returns, it is basically the monthly returns. That is the 3B, which is to be, which is genuinely called as a return. Whereas the GSTR 9 is though it is called as an annual return, it is more of a reconciliation between the financial accounts and the GST accounts. Basically, therefore, neither you will get any liability out of the GSTR 9 nor out of any ITC eligibility out of the GSTR 9. It is GSTR 9 is basically a document of reconciliation between the financial accounts and the GST accounts. Hence, hence it has to be paid. In case if the GSTR 3B is all filed for the year and you have noticed some discrepancy in the GSTR 9, then the payment of tax has to be done in GST, GST DRC, GST DRC 3. That is the provisional acceptance of the liability and payment of the liability, and you can inform the concerned LGSTO, and he will issue the form DRC 4 and 5.
That is
Therefore,
practice which
it cannot be done in the GSTR 3B of the month. It has to be through to the DRC 3. In case if if at the time of audit, if or at the time of even after the audit also, if there any liability which has come to your notice, you can make the payment through DRC 9, no, DRC 3. Sorry. Which is
that is what, because there was no uniformity in payment of taxes. That's why I thought I'll raise this issue, because some of the taxpayers are paying through 3B and some taxpayers are paying through GST. Because when you're selecting for the payment in DRC 3, you have an option whether to pay again against it.
3B
so
is
that's
basically,
if we have the uniformity, I think.
Sure.
It will be easy for the administration also to reconcile the tax payable with the.
Yes, madam. That's the precisely the reason that we are suggesting that it has to be paid to DRC 3, because that is in that it is very clear that in which financial year this additional tax which is paid going to belong, and if it is done in the 3B, it will be taken as the turnover of that year, that financial year, unless and until it is related to the amendment of any invoices which has been added, which belongs to the previous year. Only those things can be done in the monthly return. But if it is after the in the GSTR 9 is not the issue where we can file this one. But even if you file it, show it in the return, it has to be followed by the payment through DRC.
Got it, sir. Got it. So this uniformity, that it should be only through 3B and not through GSTR 9. And sir, can I proceed, Pradeepnath sir? One more issue is there. Hello.
Annapurna, go on.
Second issue is regarding this GSTR 2A and 2B, as this column 8 is, which is always changing with the due date, which is extending, and our 2A is also getting, as it is a dynamic statement, it is fluctuating every time. So I think because of that, always we are finding a difference in GSTR 8, table 8 of this GSTR 9. So how far it will be will be relevant, or any observation we have to add it in GSTR 9C, sir, actually? Because as you know, the provisional credit is keep on changing 10% to 5% and all. So how it is going to affect our GSTR 9 also?
Madam, once the 2B is implemented and 2B is a static one, I don't think there will be any problem after that.
Now
it is for the future periods, it won't be any problem. But for the past, you need to, because it's a dynamic one, as and when the suppliers upload their invoices in GSTR 1, this gets auto-populated here. Therefore, I think that's since it's a dynamic one, we can't say anything about that.
Because it
2B, I think 2B, because it is made static, 2B is, since it is static, then there won't be any problem.
In future, I think this will be not a problem, but I think for the past returns which we are going to file, like still 2021 is also pending for some, as the date got extended. So I think that will 1 year, I think we might have a provision for that, sir, actually. we might have to come out with the clarity for that year at least, because this through to be more or less it is from mandatory from Jan 1st 2022, and for the previous year we were looking both 2A and 2B till 31st December. So I think this time gap should be considered, sir, whenever we are going to look into 9 and 9C also. I think
Yeah,
because
madam, yeah, I agree with you. But since it is a dynamic one, you can take a screenshot of, whatever is coming. You can take a printout of that and put it in your audit record, so that you can always say that it is as per the 2A of that date. We are doing the audit or something like that. I think that should
sir.
be sufficient.
That might be helpful, I think, to the taxpayers. Yeah, sir. Okay. Thank you, sir.
So in the meanwhile, there are quite a few questions which have been posted in the chat box also. Sir, madam, I'll just read out one or two from there as well. There's one question which says, just to reaffirm, are the GST authorities reviewing all the financials and documents as per the GST audit 9 and 9C report submission, including CA auditors' comments on liability, paid and uploaded on GSTN portal before proceeding on the GST audit notices? This would ensure there is no duplication of the department efforts or liability notices on disclosures and taxes paid as per the audit. Ravi Prasad sir.
Sorry, Badri, can you repeat this question, please?
Yeah, the question, I'll just put it in my words. What is there from Ajay Nayak? So it says, are the officers looking at the 9 and 9C, including the comments of the auditors therein, before they start the audit? Because he believes it would augur well if they've looked at it so that repetition is avoided.
Yeah. Yes, the audit, I mean, the departmental audit officers who are coming for audit, I think we will look at all the documents, not only just 9 and 9C and its comments, including the vouchers and other.
Sir, his question is more on before coming to the audit, are they looking at it so that the effort
Yeah.
get ready?
Yeah, sure. Why not? We are looking at it when the assignments are given. We are taking that care of even what is the comments given by the chartered accountants who have audited the books of accounts, and I think that's also one of the main areas where we are selecting the cases. Naturally, if there is any liability, we should definitely do that.
Got it. There's one more which says, hi, accounting system and IT platform example SAP will not ready for state level trial balance. Pramod, do you want to unmute yourself and ask that question, please?
Yeah, hi. Good evening, all. See, his point is the taxpayer who is based out of one head office and doing business across India, having 28 or 30 plus registration. The expectation what I heard from Ravi sir is you need to have at each state level balance sheet, PL account and financial. In fact, insert is a financial reporting you are suggesting at each state level. Never asked for in the earlier restfile regime in GST before GST VAT or excise regime. Only we are giving the trading account and inward and outward supply, and to the specific one service tax regime we used to give the service tax specific details. We never ever give any details about the complete financial and trial balance. Other members of the BCIC agree with me. But now what sir is saying, you have to have complete trial balance and financial, and that you need to do that and make it a complete financial statement at a complete financial at a company level, consolidating all the states. So which I request sir to deliberate this. It will be impacting taxpayer in a big way. To revamping the system, revamping the complete architect of IT, where our IT platform or IT support is not ready now. Which is it's not a simple term you can expect. I agree with you, the law and other things, but you need to visualize and make it happen. It is a cumbersome activity. The company who are present across India.
Sir, I just want to point out, because this is already 4th year in the 4 years are already over in the GST regime, and the law is already 4 years old. and annual auditing, annual 9C, everything was done, sir. And for you also, I think that basis for that is the company level accounts only. It is not, not at the national level. It is at should be the regional level, because you have to file separate 9C for each of the entities of registered entities. Therefore, I don't know how the chartered accountants are auditing when they don't have the in registration level of the books of accounts and the financial statements. It is, I don't know how it is good. At least we should have the trial balance, and to that extent, what is the cross the vouchers which are being raised, like journal vouchers which you are raising between one branch to the other branch, and what are the expenses you are putting to across from one branch to the other branch, and all these accounts has to be done at the branch level, basically. And even if you say that there is a even in a bigger entities like maybe around where the cost audit report is required, you have to maintain the cost center wise accounts, and all these things. I think it is high time that the IT sector should IT provider, service provider should make the changes, and it to give to the company, so that it will be useful for you as well as for us.
So if sir, Ravi sir, this is Arun here. If I may just supplement to what Pramod mentioned, we had, as a company, we had multiple rounds of discussion with SAP. So today there are two big ERPs, either SAP, most companies are either in SAP or in Oracle. So when you look at it, what Pramod mentioned is that most companies are able to put together a trading account. So the vouchers, income, expense, stock movement out, everything gets captured in a trading account. Now, if you come to financial statement, if you say trial balance requires balance sheet items. It is practically very difficult to break down a balance sheet by state. If I take one example of sundry creditors, I have a vendor.
Sir, no, sir. It is, we are not asking you to break down the balance sheet. We are asking you to maintain the balance sheet at the low, at the small entity level, and consolidate at the when you are consolidating at the at the next level, higher level, you will do all the cut vouchers. That's all.
Sir, Ravi sir, if you indulge me for another 1 minute, I'll explain you the practical difficulty. That's why SAP themselves have said we can't do it. We have a vendor who is supplying material to 5 factories, which is located in 5 different states. Okay, so we have one vendor account who's supplying to different factories. So this vendor should show as creditor in each of the 5 states. Then if we make a payment, we make an advance payment or ad hoc payments as a rolling account. Vendors generally have a rolling account. Now I need to sit in judgment as to which invoice it is paid, which state it is outstanding, which state it's not outstanding. So practically ERP systems do not operate that way. What we look at is what is the net closing balance of the creditor, what is supplied, what is paid to him, and what is the next net closing balance. The creditor is creditor, sundry creditor is one example. Similarly, bank account. Bank account, I cannot break it. Bank balance is for the single company as a whole. If you have registration 30 states, I cannot break the bank balance by 30 states. So these are practical difficulties why SAP has said that you can't do it in a state-wise trial balance. Trading account, certainly we can. So I'm just bringing it to your notice that we had this discussion with the technology service providers, and they seem to be citing these accounting practical difficulties to bring out a technology solution to this.
Sir, I want to just differ with you. If one software license provider, software provider is not able to do it, it doesn't mean that it cannot be done. It can be done, sir. As far as my limited knowledge goes, I think it can be done. It's not that it is not impossible. But one thing is that you see, these type of companies, they do have presence. If you take a multinational company which has presence in the European Union, they have got separate registration in each of the European Union countries, and they operate at the level of, it's the same European Union model which has been implemented in the GST, where each state acts like a country in the under the European Union, and there is always an export from the EU state to the non-EU state. It is between the EU state. It is like same as our interstate sales. Therefore, I think it is not. It is. I don't agree with you that if they say it is impossible, it is possible, but they might not have done it, or they might not have intended to do it. That's the second issue. But it is. If there's somebody says that it is not possible, I don't know how to accept it.
Okay.
Arun, I think in the same breath, Deepak, Rohan, and Prashant sir also have raised their hands. So Deepak, maybe we'll hear you also. Yeah.
Thanks, Badri. No, I think I've heard Pramod Chidambaram. Just want to kind of supplement. I've also kind of understood what Dr. Ravi Prasad also has kind of mentioned. I think this is a moot question not only for Karnataka but practically in all states where audits are happening here. Now, I think from department's perspective, the objective is to kind of find out from a revenue which is taxable in a particular state, has tax been paid? And from an input tax credit perspective, if I have availed certain credits in a particular state, have I availed it in a proper manner? Now, each company which is kind of maintaining its books of accounts, to the extent that it has its sales ledger, it has its purchase register in terms of ITC maintained state-wise, I believe that so long as those are available state-wise, it satisfies the need of the department. Now, to insist for maintaining trial balance, let's say share capital, for example. Now, share capital has nothing to do from a GST perspective. The need to kind of split state-wise is, as Chidambaram is also mentioning, the need to kind of split. Definitely none of the ERPs, he gave the example of SAP, none of the ERPs have the capability to split it, because in terms of input, I mean, if ERP will be able to split only when we are able to kind of maintain data in that particular manner. Now, data at a trial balance level for all line items cannot be maintained state-wise. Now, so long, if we will to look at GSTR 9 and 9C, now the information asked in 9 and 9C is not at a trial balance level. The information asked is at the state level, which is basically from an output tax or an input tax credit perspective, so long as it matches to that particular state. It is not in any manner insisting for having the financial statement state-wise, which is practically not possible. So somewhere I think what we are trying to kind of impress upon Dr. Ravi Prasad is to say that yes, the ask is understandable and reasonable, but the objective, so long as the output register and the ITC is given state-wise, I think that should be considered as sufficient compliance. If assessee were to kind of be asked to maintain trial balance state-wise, then I think he'll be maintaining trial balance and not doing business practically.
Sure, sir. I
just I want to put across, sir. It is just the output. I mean, what do we mean by output tax and input tax credit? The output tax includes everything. Output tax includes the RCM tax, which is going to be paid. Therefore, the entire purchases, expenses, there will be a lot of expenses where the taxes has to be paid on RCM basis. There are a lot of services which are coming in the P&L account. There will be a lot of supplies which can be made out of the fixed assets which you are maintaining, because any sale of fixed assets, if it is there is tax has to be paid. Therefore, this not only that, sir, even the guarantees you stand for some your own related firms, that is taxable. Therefore, there is it is not that just the trading account which is important to the GST. It is the entire P&L account. It is the entire the balance sheet. It is the assets. It is the liabilities. It's the advances paid, which has been shown in outstanding balances, even in the advances paid, prepaid expenses. Everything is there is a impact of tax on the GST. It is not just the inputs and the outputs which is shown in the trial in the trading account. Therefore, I think you should please understand the perspective in which we are asking.
Sir, maybe I'll just add to what Deepak was mentioning. If we go to section 30,
sir, can I add one thing? Badrinath,
sure.
sir, can I add one sentence before you start, sir? Actually, I think Ravi Prasad.
Annapurna,
Yes, sir.
just again,
Yeah.
we'll request Prakash Rao. He's also raised his hand, so maybe we'll just hear
No,
it
no,
out.
just concluding, Ravi Prasad sir, just to continue. I think in state VAT also, because he was there in VAT regime also, just want to bring that. In VAT 240 also, there was a requirement to give the state-wise balance sheet and profit and loss account. And I think there also, they have specifically stated that it has to be given transaction-wise. So I think the same methodology we can apply even under the GST regime, like cost center-wise or segmental reporting. Something can substitute. It may not be the financial statement as per the accounting standard, what we generally prepare PAN based. So I think that is what I think many of the entities today are following in enclosing these financial statements, sir. So Ravi Prasad sir, I think even that can suffice, or is it that it should be as per the standard you are looking for the financial statements, sir? So just to add up,
Madam,
because he
that's
was clarifying on
I can understand. I can understand. If you have a trial balance, you can always prepare the final accounts. It is very simple because it's nothing but finalizing the entire thing, because the trial balance itself finalizes the entire thing. Therefore, I need not tell about accounts because you are all experts in accountancy. Once the trial balance is there, it is all as good as
only
having
the issue is
the final accounts itself.
only the issue
Therefore,
is state-wise transactions, sir. Yeah, only the
yeah,
issue is
trial
how to
balance
maintain
of
state.
trial balance state-wise at least. It is actually registration-wise trial balance has to be provided so that we can have lot of intra-company transactions which are very important for the GST point of view, because a lot of you might know lot of allocations of the costs need to be understood. Because if you see the stock transfer which has been sent from one branch in Karnataka to the other branch in Tamil Nadu, it will be shown as a journal voucher in inventory journal voucher in the books of accounts. But actually, it's a supply for us. It is if you are if you are giving a service to your own branch in outside the state, then it may not be it may not be a transaction at all, because as far as financials are concerned, if you are meeting at the national level, but that is a transaction for which is a supply for us. Therefore, you have to understand from the perspective, we have to maintain the accounts at the registration level, and we need to unless and until you maintain at the transaction, at the registration level, it is impossible for the officers or even for that matter, even the auditors from the chartered accountant community also to verify with the correctness of the books of accounts.
Okay, sir. Okay, sir.
Prakash Rao sir, I saw you also raise your hand, so we'll hear it from you also.
Sir, I request you to supplement it that accounting standards as prescribed by the ICAI, which is the apex body in India for prescribing like how the accounts are to be maintained and all, has never specified that you need to maintain a state-wise balance sheet. This is what is the comment that I have received when we have interacted with the ERP providers also. So if that is the case, how the government unilaterally can insist on that you need to have a state-wide balance sheet?
So, sir, maybe I'll just put it this way. I think we've heard the requirement or expectation from the tax office's side. Technology is what it is, the law is what it is. But as long as we are in compliance with Section 35, the requirement of Section 35, I think we are fine. As long as we ensure compliance with the expectations from each of us as far as the books of accounts is concerned. Section 35, accounts and other records. So let me just read it out for everybody's reference. Every registered person shall keep and maintain at his principal place of business, as mentioned in the certificate of registration, a true and correct account of production and manufacture, inward and outward supply of goods and services, stock of goods, inward credits, output tax payable, and such other particulars as may be prescribed. So maybe please correct me on this. As far as the prescriptions, also in terms of Clause F is concerned, it does not get into the to the extent of loans and share capitals and various other items from the balance sheet. So I think as long as we are able to establish saying it is the correct record of inward supplies and outward supplies is being maintained, I think it would be sufficient compliance as far as 35 is concerned. Maybe Arun, you think we should move to the next question? Because I'm sure this will go on.
Yes, probably we can take the questions in the chat window.
Sure.
Do you want to read it?
So I'll just read out the next question in the chat box. whether no. Is GST, I suppose GSTR2, going to be introduced? Also, any time limit by which 3B will be withdrawn?
As far as GST R2 is concerned, I think we are already come to the stage that we have already brought the GST R2B, and from whatever the input tax credit is there in the 2B, it will be only claimed in the monthly return. And we have got a facility which to communicate the missing invoices to the suppliers. We have developed a system in the GSTN system. I think it has almost come to a stage that we have brought the GSTR2 in an indirect way, almost. I don't think we don't know exactly, but whether the GSTR2 is going to come or the entire GSTR2B with the communication will suffice. That has to be taken at the policy level, at the national level.
Sure, sir. Sure. I think well taken. Thank you so much. So there's another question which says, whether whether state GST authorities of one state can ask for details pertaining to other states.
Sure, sir. We are also thinking of. I mean, we are in the way of creating these mechanisms for same way as communication between the two taxpayers. We are also trying to have communication channels open at the level of the departmental offices between the states and the center. I think that will not be a challenge later on.
Okay, that was very nice, sir. Thank you so much.
I will just add. I'll just add to this. I think there was one more question about whether there is a common audit process statewide. So I would just like you to know that there is something called Committee of Officers in which Karnataka is a member and other 8 states are also members. This is and they are basically developing a protocol so that there is some kind of uniformity nationwide. So we have also given our inputs, and Karnataka having been a front runner in audit manual and having brought its own manual, we have also made substantial contribution to that committee, and shortly I think that would be finalized so that you will see some kind of uniformity across the states. And coming to whether state authorities interact with each other, so that we do, we have to see the context. So if it is kind of an investigation or intelligence based case, then we do it. But as Dr. Ravi Prasad said, there was no formal mechanism. But now again, Karnataka has taken the lead, and we are trying to have some kind of uniform platform, a digital platform where sharing of information will be more formal and having more uniformity across the states. So we are already doing a pilot with neighboring states, and we hope to, and we have proposed to law committee to have a uniform mechanism in all the states. I just wanted to add that. Yes.
Fantastic, madam. Thank you so much. I'm sure that has given the assurance that the person who posed the question required. Thank you so much. Arun, you want to take the next question? Or I'll take the next one, you maybe take the one after that. There's one more question, sir, which says expectation. Okay, I'll skip that because it is the same about trial balance. There's one more question which says whether we have to match 100% deemed supply input tax credit with 2A for financial year 17-18, or we claim basis of tax invoice since the GSTR 2A was not fully effective in that period.
Sir, if you see this issue of 2A is nothing but the admission of the supplier that he has owned the transaction and paid the transaction, paid the taxes for that transaction. In case if it is not coming in 2A, it is an indication. I'm not saying it is the proof. It is an indication that he has not declared, owned up the transaction, and he has paid the taxes on that transaction. Therefore, it is very clear that under the section 16 of the GST Act very clearly says that the supplier has to own up the transaction and pay the tax, so that the recipient is ineligible, eligible for the input tax credit. The easiest proof for that is that the entire transaction should be reflected in the GSTR 2A. In case if it is not reported in the GSTR 2A, it is a serious matter for the both the recipient and for the department whether the taxes has been duly discharged by the supplier. Therefore, now the question is the onus of proving that the taxes has been paid to the department is on the dealer, because the burden of proof for ITC is basically on the person who is claiming it. I want to bring, having said this, I want to bring it. This is a clear shift from the GST regime from the earlier VAT regime. The GST regime, the tax is the basic tax payable is the output tax under Section 9, and the ITC is basically in the nature of a reimbursement or a refund of the taxes paid at the earlier stage. And there are a lot of conditions for claiming the ITC and issue of ITC. Therefore, you have to understand the change in perspectives in looking at the ITC as a whole. Therefore, in this issue, it is basically you have to prove the transaction that the taxes has been duly discharged and it is declared by the dealer to claim the ITC. How you prove it is basically on the person who is auditing as well as the person who is submitting and showing the accounts, and as also for the honorable courts to interpret.
Okay, sir. Okay. I saw one more hand being raised. Deepak, you want to ask a question? Or maybe Madhur?
Yeah, Badri, thank you. Sir, Ravi Prasad sir, thanks for this. My question was also this only, 2A. So while I understand the department wants to track that a genuine vendor has paid, but sir, during the 17-18, the 2A was never mandatory. The 2A was introduced somewhere only in the second half of 2018. And so what is the legal backing or the statutory backing for the department to insist on a 2A reconciliation? Because this will severely, have an impact on a lot of GST SSCs across India, not only Karnataka. So what is the statutory backing? Like 2A came only in 2018, which is rightly pointed out by one more panelist on this, on this show. So what is the statutory backing? The other thing is, are you, what is the...
Let me answer this question. Let me answer the first question, and you can ask for the second one. 2A is there right from 1/7/2017 itself, sir. And as far as the GSTR 1 is there, right from the beginning it is there. It is 2A is nothing but the recipient wise consolidation, not consolidation, extraction of all the invoices raised on me. Therefore, 16.2 is also there. The legal backing is completely there. I'm not saying that if it is not there in 2A, I will deny you the ITC. It is for the recipient who is claiming the ITC to prove that the taxes has been paid to the government.
But I think the 2A in the portal was live only in the later part of 2018. So there was...
2A is only a mechanism, sir. 2A is only a mechanism. 2A is not the law. 2A is the mechanism in which the proof of having paid the tax is clearly visible to the officer. Otherwise, he has to go for other means to verify whether the taxes has been duly discharged to give the ITC.
Okay. And sir, just one more question. What is the view the department will take for cross-charging of the salary of the head office, MD, CFO, CEO, HR, admin, IT, all the corporate level functions? Now that is becoming a big issue based on the Columbia Asia judgment, the AAAR, which is pending before the Karnataka High Court. On 14 January, the Maharashtra AAAR has ruled on the Cummins India case that salary costs recovered by head office from the various branch offices has to be included in the valuation, and it is treated as the supply. So, sir, we want your very, very clear, because this is again any SSC having more than one state, whether it is 2 states or 28 states, it will have this issue. Sir, the other thing pertaining to cross charges, if I have not cross charged, so one is where I have cross charged, is there GST applicable based on the Columbia judgment or anything? And where I have not cross charged, will the department insist for me to evaluate as per Rule 27 and 28 and ask for a liability? So request your kindly considered view, both the cases where it is cross charged and where it is not cross charged.
Cross charge has been, I think it is a settled position of the law now. The cross charges has to be done because it is like the stock transfers of goods are there, when once from one state to the other state, the goods are transferred between the same entity, which has got different registrations, then it is treated as a supply. In the same way, if you are providing, the entire thing is the employee of this company in this state is providing some services. It could be managerial services or anything. It needs to be charged to the profit center which is there in that state. And you are aware of the concepts of cost center accounting, as well as even in the managerial accounting, even in the profit analysis, and how do you calculate the profit of each entity, and each branch or cost center and profit centers. Therefore, I think if it is not cross-charged, the supply is there, and if the officer deems that there is a supply, naturally he will say that the tax is not paid in case if it is taxable.
So basically,
that is the basic reason for that is the basic thing which the audit is done either by the chartered accountant or by the departmental officer.
So basically, department may insist where it is cross-charge and where it is not also cross-charge. If it department deems it as a supply, there could be a potential insistence by the department.
Sure, sir. If it is if there is a cross-charge and no, it has not been declared and tax has not been paid, naturally the audit officer, even in fact, the chartered accountant has to raise this issue in his audit report when he is filing the 9C.
This cross-charge is not for stock transfer of goods. It is for the managerial employee like CEO, CFO.
Yes, sir. That is there in the Columbia Asia. It's a clear judgment, no?
But that matter is pending before Karnataka High Court, sir. That matter is.
Madhur, let me just maybe interrupt here. I think, as you said, it is pending before the High Court. So maybe we wait for that ruling as well. But yes, from a departmental perspective, I think Dr. Ravi Prasad has given his views.
Sure.
Want to go to the next question?
Yes. There's a question by Mr. Arumugam. If I may just quickly summarize. So this is on submission of DTA forms for supply to SCZ. Can the form be submitted in hard copy?
Please, can you repeat the question, sir? Please.
Supply to SCZ. For supply to SCZ, can
SCZ.
Yeah, SCZ. Yes, SCZ.
Yeah.
Can the DTA form be submitted in hard copy? Is the question out here.
The SCZ, sir, as you are aware, sir, the SCZ is having a customs barrier in just before entry to the SCZ. Any goods are going to the SCZ developer or SCZ unit has to pass through the barrier, and it has to be duly acknowledged by the officer, the customs officer, that the goods have been received in the SCZ. And this needs to be, this is an evidence for the officer at the time of audit. He need not file it in the along with the returns, but at the time of audit, he needs to submit this before the auditing officer or the chartered accountant who is auditing at while making the 9C.
Right. So moving to the next question, there's a question on stock in transit with respect to the notification 40 of 2021 on claiming input credit. So the question is, when there is a timing gap for stock in transit as of a month end close, at what point in time can the credit be claimed? Because the invoice would be dated the previous month, but the goods are received in the subsequent month.
The law is very clear on this issue. You cannot claim, even if you have received the invoices in the earlier month, you cannot claim the ITC till you have received the goods or services. Therefore, law is very clear. It is not the invoice date which is important. It is the eligibility for ITC which is important. And the eligibility comes only when you have received the last installment of the goods. Therefore, I think you should claim only when you have received the goods.
Right, sir. So I think there's a follow-up query from a different person, but the question is, so when there's always this timing issue. So in 1 month, there's a spillover of credit from 1 month to another month. So in a particular month, in 3B, your input credit could be higher compared to what is in 2B, because you're not just claiming current month's 2B input credits, but also claiming previous month's 2B input credits because of this timing issue. So how will department look at 1 month's 2B or a cumulative 2B for a comparison of to see whether your input credit claim in 3B is higher than the input credit eligible in 2B? Do you take 1 month comparison or a cumulative comparison? That's the question.
Sir, as far as the eligibility is concerned, it is very clear that you have to have received the goods and services, and that is very clear about that. The department from our side, if you ask what we are going to see, we see month wise, and we also see at the quarterly, we also see at the yearly, we also see at the last 4 years also. Because ultimately, in sometimes it will happen that he has not claimed the return in the monthly return, which he can claim up to the September next year. Therefore, we always when we do analytics of input as credit, we see for the month as well as for the quarter, as far as for 6 months, 1 year, down the line for 3 years or 4 years also, and see whether there is a real consistency in this, or is there any the periodical changes, are the fluctuations are getting evened up or not. And in case if it is still there, we take this as a case of a risk for the revenue, and we will take action appropriately. Basically, it is how the analytics is done is basically from our side. We also always try to reduce our false positives by reducing the risks there. In case if it has there is an irregularity in the return, or in 1 month there is more and 1 month there is less, and if it is for the 3 months, if you summate and check, if it is getting evened out, then I don't think it is a risk for revenue. But if it goes on for the next 3 months also, then it is a chances that there is a risk. Therefore, analytics is done on various parameters, not only on this.
Great, that's good to know. Moving forward, I'm going to skip some comments which are not really questions. There's a question on how do we amend GST number and place of supply in the E-Invoice, which was inadvertently captured. Is there a way to amend E-Invoice for the errors? Is the question.
Sir, E-Invoice means you have to revise if you have to make the corrections, then you have to raise a credit note for the entire transaction, and again raise another invoice so that it can be corrected. That mechanism is already there in the system itself, as well as in the law. Therefore, I don't think there is any challenge in that.
Right. Moving forward, there's a question on ITC not reflected in 2A. In case of default in payment of tax by seller, recovery shall be made from the seller. However, reversal of credit from the buyer shall also be an option available with the revenue authorities to address exceptional situations like missing dealers, closure of business, etc. So essentially, this is pointing out saying, while there is a recovery proceeding against the seller, the recourse of not allowing credit or reversal of credit should be taken up only when the seller is missing or is not traceable.
So Section 16 is very clear. Section 16 is very clear that the tax has to be paid to the government so that ITC can be taken. In case of course, we always go behind the seller first, because if before penalizing the dealer, recipients, we always go behind the sellers so that whether he has not paid, for what reason he has not paid, whether he is owning up the transaction and take up recovery action. Yes, of course, even the honorable courts have also told the same thing. We primarily go behind the sellers first, and if the taxes is not going to be paid, naturally, then the recipient will not be eligible for ITC under Section 16.
But there is no mechanism to reinstate credit if there is a recovery from the seller, isn't it, sir? Procedurally.
Yeah, that's what, sir. That's
so
what
the department in a way
is made very clear now.
From
January also, we have given a facility for the recipients to report, and the same will be communicated to the suppliers that your recipient has reported that you have not uploaded this invoice because it is not reflected in his 2B. Therefore, the supplier now, either he should be, if he is a genuine person, he should own up the transaction and pay the tax, whatever is there, and it will naturally be reflected in the 2B of the recipient, and he can claim the credit on that. And if he has not owned up the transaction, naturally the recipient will never be eligible for ITC because it has to be in the 2B.
Sure. There's one question, I'm not sure if I follow it. It says, is GST applicable on credit balance written off and shown as other income received from customers which is not refundable?
This is very important part, that good thing that you have raised. The other income which is been, if some balance sheet or been the final accounts is showing that the company has received other income, for what purpose it has received, for what, is it a supply, is it on account of a supply, is it not on account of a supply? This has to be verified. Once it is, because the services definition of services, if you can if you recollect, it's much wider compared to the earlier service tax regime. Anything other than goods is a service. Therefore, it's a very wide scope is there, and it is going to be verified whether it is on account of any service provided, whether it is coming under the ambit of supply, and if it comes under the ambit of supply, naturally the tax has to be paid on that. If it doesn't come under the ambit of supply, then there is no need to pay any taxes on that.
Right.
Maybe, Arun, at this stage, maybe there are two hands which have been raised. Should we ask them?
Sure.
Deepak, you want to unmute yourself and ask? Deepak Asopa?
Please, can you repeat?
Deepak Asopa, maybe he's away. Panikumar, you want to just unmute yourself and ask your question, please?
Yes, Badri. Sir, Ravi Kumar, sir. This is follow-up question on the E-Invoice amendment. So actually, see, in case where we have made a mistake of GST number wrongly mentioned, in case of services, we don't have any issue. We can issue a credit note and do that. In case of goods, physically, there will not be any movement of goods. So how will we deal in such cases? Because otherwise, we need to bring back those physically and then raise it once again invoice.
Sir, it is in case of goods also, sir, there is no that much issue, because the moment you raise a e-way bill, add the invoice, e-invoice for the supply of goods for a wrong person, the wrong person has to reject the goods. I reject the e-way bill in his, because the SMS will be sent to him, and he has to see, and he should say that it is not my goods, therefore he will be rejecting it. If it is not rejected, it is deemed to be accepted by the either recipient as per the law. Therefore, once it is accepted, then the only mechanism which you have got is to through a credit note and debit note, and he has to raise a reverse e-way bill to you, and naturally then it has to be followed up by the corrected invoice as well as the e-way bill. See, sir, basically that the movement of goods have already started. Since the movement of goods have already started, you can't reverse it unless the other person changes it. But the document has to be, there is no question of correcting the e-way bill as such. It has to be through a mechanism, that is the credit note and debit note, as well as you have to have a reverse e-way bill, in the sense that you are from the same recipient back to the you, and then again it comes into your stock, then again you have to raise the correct e-way bill for that invoice and e-way bill.
Okay, there's another.
Thank you, sir.
There's another question which says business audits. Okay, audits are to be completed within 3 or extended 6 months. However, notices are being issued for multiple years in the same notice with quick turnaround expectations. Is there a provision for selective year-wise GST audit or assessment as against general notice for all years?
Audits are always assigned based on some risk parameters, which we will be doing at our back-end systems. Both the center as well is doing its own risk analysis, and we will be doing our own risk analysis, and and based on that parameters, we take up the we assign the case for audit. And the audit is basically, sir, audit is under section 65. It is an independent mechanism, which is I mean, independent from the section 73, which is there is the I mean, assessment. I mean, I will not call it as assessment. It is more of a determination of the liability, tax liability, or a determination of the excess ITC claimed or excess refund obtained. Therefore, as and when the issues are cropping up, sir, we will be doing the assessment, we'll be doing the audits, and these are, I mean, these are all issue based, basically, more of an issue based. We also have to reduce the, I mean, contact time between the dealer and the officers. We are also thinking of team based audit, where they come up with only one issue and verify that issue and leave. And in case if there is another issue, then they will come again or some and do the audit. I mean, only the theme on that theme. And you, as all you know, you can't have the assessment for the same issue multiple times. But about different issues, you can always have separate assessments for that issue. Therefore, this is basically followed by the central authorities. We had an year-wise assessment earlier, but we can at the same time we had 39.2, which says the reassessment for already an assessment after the assessment is over. Therefore, I don't think there is basically any legal issue in that. But the audits are specifically to be completed within the stipulated time, and if it is cannot be completed within the time, then it has the power. It is within the powers of the commissioner to extend the time limit for audit. And I don't think anybody will sit for 3 months in any one business premises for doing the audit, sir. It will be done, sir. It will be done.
So true, sir. So true. Sure. Madam and sir, there is another question, which is GST system is currently allowing maximum 10 business place details uploading and blocking the portal till the time authority approves on is creating issue on the business place. Pramod, do you want to unmute yourself and ask this question, please?
Yeah, thanks, Badri. Ma'am, see, currently for the particularly this point coming from the business expansion perspective, there is a hindrance in the GST portal where the system is allowing us to only add 10 additional places where we are expanding at pan-India level, and Karnataka is the major state for us. So portal is not allowing max 10 location you need to add. Then the process of approval, rejection will take 15 to 20 days in the cycle. Once the authority will approve or reject, so that we can upload the information or document in the portal. Again, after taking some 10 plus days to approve. In this process, we'll be losing business from 10 to 20 days. And subsequently will not able to add additional places where the store are in pipeline to work. The not sale will be losing business and government also losing the revenue. Can the process of this approval, system approval can be reduced from 15 working days to at least a week time, so that business can be benefited and it will be definitely giving the
Sir, as far as the process of approval of the additional place of business is concerned, we have only prescribed the maximum time. It is now we are not prescribed the minimum time, and this maximum time is prescribed based on a study from the GST Council, from the officers of the GST Council, because of the reason that in case if it is an Aadhaar based registration, we have got a certain time schedules, and if it is Aadhaar is not provided, we have got time schedules. If it is such a thing, we have got a lot of issues to be taken care at the time of providing registrations. Because our experience earlier was we used to do it within 3 days or 7 days max. But nowadays it has happened that a lot of fake dealers have come with the fake invoices are being issued, and the governments cannot take so much of chances and allowing the fake invoice peddlers to run the show. Therefore, it has after much deliberation only these maximum time limits are prescribed, and I think within that time our officers are going to do it, and it is. It is because of the, we all want to reduce the time, but that should not be at the cost of the basic revenue itself.
Sure, sir.
Only request industry, only request to the to madam and to you to at least look into this. You should not judge all the dealer in the same lens. That is only request what we are having.
We had this problem in even our KST Act and other things, where the registration was supposed to be given. We had a problem in case if the officer has got reason to say that how the revenue can be recovered in case if it is it has become blacklisted or it is found to be a fake dealer. I don't think that if that some guarantee mechanism is created, I think we can reduce that time limit very drastically. If some sufficient guarantee is given, I think we can even think of even giving on demand, because we are sure that our revenue is safe. But the only thing is because of the risk of revenue which has been, you might be reading in newspapers, a lot of fake dealers are coming up, and we have been arresting them. We are putting them under prosecution, and everywhere throughout the country we are seeing a menace. And because of that, government is little. We are also little hesitant to take some drastic measures to reduce the time limit, so that we should not give this. This should not become a window for the fake dealers to proliferate. That is our concern, basically.
Thank you, sir. Only one additional point I'm referring here. Yes, I agree with you, sir. What you are saying. Yes, we can judge the organization or taxpayer on the for the initial registration. We are here requesting for the expansion. So we are having registered dealer and having multiple business places in the same state, and we are requesting for the allowing us to do the additional places. We are not going to.
Okay, sir. I think, sir, we have made note of this point, sir. We will discuss at the national level and see
Ravi
how best we can do.
If you permit, maybe I'll answer. It looks like a one-off case which Pramod is experiencing. So maybe if you approach the help desk, I think that will also resolve. Pramod, you might want to do that. So in the meanwhile, there's one more question. I'll just put it in my words instead of reading that out exactly. It says if there is a mistake by the vendor to file an invoice as B2C instead of B2B, then it will not appear in my 2A or 2B. So is there a way out to secure my input tax credits?
Sir, this is again, if it is if we have declared that a transaction which is a B2B as B2C, this is a mistake. Therefore, the mistake has to be corrected in the return only. It has to be corrected. It has to be in the next return. It has to be correction has to be made, and it is to be reflected in the next return. And we have said that this process can be done up to the next up to the returns of the next September. Therefore, it will get naturally get reflected in the GSTR 2B and the entire 2B as well as in the 2A, and gets it gets cleared. Therefore, I think that's a mechanism which is there in the law already, and I think I don't think there is any problem in that, because if somebody has shown as B2C, it is not reflected in 2A, the recipient naturally will inform the supplier, which is that it is not coming, that in case a mistake is come to the notice of the supplier, he can make the corrections in the next return, because he has to reduce the turnover in the B2C and declare that invoice in the B2B transaction, in the GSTR 3B.
Sure. Madam and sir, maybe one more question. I'll only answer that. Department is proposing to disallow ITC, saying vendor is not filed as 3B. So I think Ravi Prasad sir has already answered that. So let me give it a pass for now. Is GST applicable on credit balance written off? I think sir has already answered.
Patri, can I ask one question?
Sure, sure.
Yeah. This is Annapurna Kabra. Can I talk?
Yes,
Hello?
yes, please.
Yeah. Sir, one more this common issue which you are facing from the department is reconciling your e-way bills with the 3B actually. So is there any specific instruction to be followed, or like how we have to come out with the reconciliation, sir? Ravi Prasad sir, because this is
Madam,
a common.
this is e-way bill. If you see the nature, the e-way nature of the transaction and how the process, how the e-way bill is generated, the e-way bill has got two parts. The first part is part A, which is the invoice details.
Correct.
In this case, in the case of e-way bill, we have got separate tabs. You have to select whether it is on account of a supply or not on account of a supply, like job work or say, I mean, just a delivery note or something like that. If it is on the basis of a supply, you are entering the invoice number and the document number and all those details. Naturally, that should tally with your the invoices which are shown in the returns. Ultimately, it is there can't be any difference. It is a 2 in e-way bill cannot be 3 in the invoice, and 3 in the e-way bill cannot become 2 in the invoice. Therefore, naturally, the e-way bills issued on account of supply should naturally tally with the e-way bills shown. Turnover shown in the invoices, provided both are of goods. If there can be a difference between the e-way bill and the supply through e-way bill and supply declared in the return. It can never be less than e-way bill turnover can never be more than what is there in the 3B. It can be less because there can be supply of services also, which may not be covered under the e-way bill. Definitely, e-way bill turnover declared in the e-way bill on account of supplies can never be lesser than the more than the what is declared in the GSTR 3B. Therefore, we do an analytics, we do comparison. Sometimes we do at a summation level, and if there is any major discrepancy, we may even take the invoice number and match it at our data level. Therefore, we need to do a lot of analytics. And as you know, madam, this is the world of analytics now. Big data analytics is the area where everybody is looking at improving the business processes, as the companies are also doing, and naturally we'll also be doing that so that we can get some more revenue, because our organizational goal is to collect more revenue naturally.
Thank you, sir.
I think that's a very important message on the lighter side. Sir, there is one more question. Can a credit note be issued for the reason other than deficient supply or excess taxable value of taxes charged?
See, credit notes are issued basically. Credit notes are issued in the business for various reasons, only to credit the dealers' account, the accounts of the creditors when they want to debtors or creditors. See, the credit notes are business credit notes are issued, business debit notes are issued right across the business. But as far as GST is concerned, we only recognize the debit notes and credit notes issued by the supplier from the supply side, because we always take the original transaction starts from the supplier. Therefore, naturally, any change in the supplier's supply value of supply will naturally affect the supply. Therefore, we always take cognizance of the debit notes or credit notes issued by the supplier. But the business can, in the business, there can be the initiation may happen from the recipient side also by issuing a debit note or credit note, which is not considered as a GST document. It is a business document, no doubt about that, but the initiation can happen from the recipient side, but the GST does not recognize that. It is what the supplier, debit note and credit note, what the supplier issues are recognized as GST documents. And if it has got an impingement on the tax collection, tax liability, then only it will be of an issue. If it is not going to affect the turnover or tax, it won't be an issue, that it can remain as a credit note and debit note. A credit note and debit note can be issued as a business document for various reasons, and that we don't have any issue on that. But only we consider the debit notes and credit notes as a GST document only if it affects the tax and if it is issued by the supplier. Only on these two issues.
Okay, understood, sir. Sir, thank you so much. Prakash Rao, sir, maybe I'll request you to unmute yourself and ask the question, which you've posted in the chat room.
Sir, my question is that there is an option of inbound manufacturing which is being provided now. So, if a existing DTA unit is migrating as an
Can you
inbound
make it a little louder,
manufacturer,
please? Louder, please.
sir, there is an option of inbound manufacture which has been now announced by the government, central government. So, if an existing DTA unit is converting itself into a inbound manufacturing facility, the GST number is not going to change. So, the electronic credit ledger remains the same. Hence, is my understanding correct that the credit that is carried in the DTA register gets transitioned as an inbound also?
The law is clear that SEZ unit, if it is a SEZ unit, it has to take a separate registration and from the all other DTA units. Therefore, in case if it is gets converted, naturally the number has to change. Therefore, it has to
Sir,
be.
my question is very clear. I am not referring to SEZ.
No, I am not able to hear
different
you. Can you speak loudly, properly?
Sir,
Sir, I am trying to. But
Prakash,
if you are able to listen to me, that what I'm saying is that DTA is converting into inbound manufacture. SEZ is not coming into the picture. I know that SEZ will have a different GST series, but inbound manufacturing DTAs will not have different series. The GST number doesn't change.
Yeah, it doesn't change, sir. It doesn't change.
So the credit gets carried forward.
Yeah, it
Am
gets
I
carried
understanding
forward.
correct?
When the number is not changed, the credit continues to be there in your ITC ledger.
Thank you. Thank you.
There's one more question from Kushal. Kushal, may I request you to unmute yourself and ask it, please?
Sir, good evening, sir. Good evening, madam. One quick question on the e-way bill. When we say we have to do a reconciliation on that, though I completely concur and agree that we have to carry out that reconciliation, the e-way bill login permits me to generate report only for last 12 months. So if I have to say I have to do it for 17, 18, 18, 19 and 19, 20 today, I will not be able to download those reports because I always was under the impression as and when there is a need, I will download the report and carry out the reconciliation as and when required. But since I am not in a position to do that today, would that be appropriate to reach out to jurisdiction office and seek the report from them on this aspect?
One thing, madam, it is always better to download and keep a copy so that you can do a reconciliation.
Agree with you, but
this issue whether the facility can be provided, because we have also got some data issues. Data issues is not the data issues. It is the bandwidth issues and the space available. The other the technical issues are there. We will talk to our IT team and whether we can provide to everybody or on request that we need to talk to our IT team.
Sure, sir. Thank you, sir. Thanks a lot, sir.
There is one more hand raised. Manjesh, do you want to unmute yourself?
Yeah, thanks, Padri. Thanks BCIC and CCT Department of Karnataka to organize this seminar for the benefit of the taxpayer. Padri, am I audible?
Oh yes, Manjesh, please.
Yeah. Thank you. Sir, I've got two queries, sir. One on, as you rightly pointed out, that we are moving from GSTR 2A to GSTR 2P, which is predominantly looking towards the initial implementation of GSTR 2, which was envisaged. Now there was one more provision where my supplier would fail to report the transaction. I had got an opportunity to report the transaction by virtue of GSTR 1A. So is there any possibility that you are looking at that where you give an option for the recipient to upload such invoices, sir, in the upcoming days?
Sir, agreed. But we have already brought this this mechanism from 1st of January in the form of a communication between the supplier and the recipient. The moment you upload the missing invoices, it will be communicated to the supplier, and it is made note to the supplier that you have not uploaded these invoices. It is for the recipients to see that you upload the invoices in the communication and communicate to the suppliers so that the suppliers will report and pay taxes on that. As far as the earlier period is, sir, as far as 1A is concerned, we had put that on hold because of technical issues. We could not implement it. Therefore, we, as an alternative, we brought the 3B, which is now the mainstay of all the returns. Therefore, there is no, we have only one and 3B, GSTR 1 and 3B as our main returns. And as far as that is concerned, I don't know whether this issue can be raised now, because already we have moved to the next level of communication, and other GSTR 2B has come. We have limited the ITC claim to the amount which is there in the 2B. Therefore, I think we have moved far from that situation.
Sure.
One more question on Badri, can I?
Please. Keep it brief.
Sir, one. Yeah. So, sir, we have an SEZ unit where we supply the machines to our customers. Most of my customers come back saying that the transactions what we report on the NSDL portal are not getting reflected in their GSTR 2B or 2A, 2B, both the cases. And also, for same thing is happening to me where I import the duty, because most of my 90% of my input or the input tax credit relates to imports. When we see the last 2 months data, we have very meager input tax credit which is flowing into our GSTR 2A bucket. Most of the data is not appearing. When we raise the ticket on the ICE gate, they say that just settle this with GSTN. When we go to GSTN, they say that there is a facility where you can go and log into your portal in the service button. You can go for search of POE. When we try to do it, it is on single basis. One time I can do for one bill of entry. Now we have thousands and thousands of bill of entry which we need to search it on the search button. So which is a very time consuming job, and we are running from filler to post to without any answers from any authority, sir. Can you just throw some light here, sir? How to
please, sir, you can please communicate through a letter with explaining what the difficulties you are facing. We will certainly flag this issue to the through our IT committee to the GSTN and see that this issue is resolved. And there are chances, there are some positive, there are some hiccups, sir, because IceGate is maintained by a different organization and GSTN is maintaining our GST. Therefore, there should be a continuous two-way communication between the IceGate and the GST portal. We agree with you, sir. We will flag this issue and we'll take it up at the highest level so that this issue will be solved as early as possible, sir.
Thank you, sir. Thank you, sir. Because we fear because there is an audit whenever there is a discrepancy between the IceGate data and or a GST 2A data and GST 3B data, there is an audit notice which is going to come in a very short time. So,
sir, it won't come, sir. It won't come because if it doesn't come under 2A, it will not come under 2B. You will not claim the ITC, sir.
Sir, Ravi Prasad,
audit notice will not come, sir, but your ITC gets restricted. That's the reason why it is a matter of urgency.
Yes, sir.
It is not from the audit side, sir. There will be no notice because you will never be able to claim the ITC at all.
Sir, Ravi Prasad, sir, I just answer on your behalf with your permission. Manjesh, I think it is more appropriate that you take up this issue with the Seva Kendra or the help desk. I'm sure they'll give you a solution for this. Or maybe through the Seva, through the help desk, maybe reach out to the NIC guys as well. I'm sure you'll get the solution. Sir, it's already 6 o'clock, past 6 actually. So one last question, if anybody has. Or maybe I'll misuse Arun's name. Arun, one last question from your side, or something.
Sure. I have few questions. Probably this session has been so educating for us that we can go on for hours. Thanks a lot, Dr. Ravi. So this was very useful. I'll take the liberty of asking one last question. We've been seeing this issue quite a bit in the industry where we have sales that is made and we pay the GST. But later there is some dispute because of which we are required to reverse the sales. So there is sales and there's 18% GST paid to the government. We don't recover the sales, so that is a loss. Adding to that, even that 18% GST paid to the government is becoming a loss because there's no way to reverse the sales if it is beyond the time limit of September of subsequent year. So is there a recourse? Is there a way we can at least recoup the GST and not because this supply has never happened, the consideration was never paid by the customer. So is there a way we can?
Sir, we go by the we when we designed the law, we went by the basic premise that all the accounts will be audited by September, and they will returns will be filed, and it's the entire accounts are freezed. In fact, it is a freezed accounts which will be done by 30th of September in the next financial year. On that basis, whatever the adjustments you need to be done should be done in the returns. And we don't have any, we can't allow it to continue for ages because of the fact that we have got a lot of mechanisms and procedures tied to the returns, like our IGST settlement, the center state, taxes collected, the sharing of the center and states. Therefore, we have got a lot of processes which are tied, and there is so much of in IGST settlement which are not been. It's only a case of push where there is no pull. When there is no pull, that these amounts which are going to be, since IGST itself is a zero balance account, there cannot be any residual IGST which is their GST account. Therefore, it has to be distributed to the states based on the agreed formula which is there in the law. Therefore, in that case, we can't go on allowing the corrections to be made for eternity. In that scenario, sir, we have taken September 30th as the last date, and on any return which are going to be filed for the September in the next financial year as a pretty time for making all the corrections, because even the income tax audit also would be over, and even the company audit would be over by that time, and I think everywhere these accounts will be freezed. Therefore, going by the flow, we also have freeze the corrections up to September. Going by this, sir, I think there is no way you can make corrections after that period. This is the status of law, and this has been upheld by the Supreme Court also in the AAP and AAP associate, and company case, as well as in the Bharti Airtel case.
So one suggestion for a kind consideration. So practically what happens is the reversal doesn't happen in the same financial year. It happens 3 years later or 4 years later. And the reversal is also accounted in the financials, where bad debts provision or bad debts written off, debtors written off. So that there's an accounting treatment in a different financial year.
Sir, you should be able to tell us, guide us, sir, because you have got a accounting standard to account for the transactions of the past years, even after the finalization of audit of accounts. You have to guide us on that. But as far as GST is concerned, I think if it is on the goods, you can't make any correction entry, but you got to think over. But it is very difficult as far as the law is concerned.
Okay.
Sure.
Sure, sir.
Thank you.
Thank you. Thanks, sir. As Arun was just mentioning, it was a wonderful session. It was great interacting with Madam and you. Madam, thank you so much for your time. You readily accepted. You said any date of our choice. Thank you so much. And yes. Yeah, as BCIC, Madam and sir, we've always interacted quite a bit with the department. Thank you so much for your time today. It was wonderful. I'm just repeating the same words. It was a great talking to all of you. And yes, I'm sure there are takeaways for everybody on this session today. It was a good crowd. Also, it was a mix of technology. The kind of names that I saw, it was mix of technology, e-commerce, manufacturing, multiple state, single state. It was a kind of a mix that we had. I'm sure each of us have something to take away and course correct ourselves if there was something else in our thought from the viewpoint of approaching the audits. And I'm sure it is helpful. Thank you so much, madam. Thank you very much. Thank you so much, sir.
Thank you.
Rupa, are you there?
Yes, sir.
Okay, madam, over to you now.
Yeah, thank you very much, madam, for accepting our invitation for addressing. This was quite very interactive session. and kindly accept our humble thanks, ma'am. Thank you very much once again, ma'am.
Thank you, madam. Thank you so much.
Thank you. Thank you.
Thanks.
Thank you. Thank you.
Thank you, sir. Thank you so much.